They told her no because her credit score was 580. Later, she was approved within 90 days. Today, I'll show you exactly how, for any score between 550 and 650 in 2026. Meet Lina, 580 score, 2 maxed credit cards, 1 paid medical collection, $7,200 in savings. She paid balances down under 9%, removed dispute remarks, documented 12 months of on-time rent through asset verification, and structured an FHA loan with a gift for closing costs. Result? AUS. Approve eligible. Contract accepted. Closed on day 89. And this isn't rare. We've closed hundreds of loans for buyers under 650. So here's the exact system we use in 2026. In the next few minutes, you'll get the 90-day approval plan, which loan fits your score band, and 5 copy-paste scripts that force lenders to show your true all-in payment and lock status. Remember, this is educational only, not legal or financial advice. Talk to a licensed professional for personalized help. All right, first, your 2026 reality check. FHA. 580 plus means 3.5% down. 500 to 579 means 10% down. Some lenders still apply overlays. VA. For eligible borrowers, there's no official program-level minimum score. Approval leans heavily on residual income and recent payment history. Many lenders still overlay around 600 to 620. USDA. In rural eligible areas. Automated approvals are strongest at 640 plus. Under 640 may require manual underwriting and stronger documentation. Conventional. Most lenders look for at least 620. Between 620 to 650, compare 60-month total cost versus FHA carefully. And take note, credit model transitions are still uneven across lenders in 2026. Some use different bureau combinations and scoring models, so always ask which model and bureaus they pull, because scores can vary between lenders. Now that you know the landscape, here's the 90-day approval plan, 2026 edition. Chapter 1, Day 0 to 7, get a true mortgage baseline. Pull a lender tri-merge, not a consumer app score. Freeze new credit. Do not open accounts. Remove dispute remarks before underwriting when possible. FHA files with large disputed derogatories may downgrade to manual. Gather 12 months of rent proof, plus pay stubs and W-2s or income docs. Then ask your lender to run DU and automated underwriting with 12-month asset verification, so positive rent history is captured when eligible. Now here's why this matters. 2 credit card payments this week could move you into a better pricing tier if you pair it with a rapid rescore. Let me show you how. Chapter 2, Day 7 to 21, Utilization kill shot plus rapid rescore. Target each revolving card at 9% or less utilization. If cash is limited, pay down smaller cards first to flip multiple accounts to low utilization. Once balances update, request lender-initiated rapid rescore, typically 2 to 5 business days. Exact words: I paid card A to $45 and card B to $18. Here are receipts. Can you submit a rapid rescore with all bureaus? Once your utilization is handled, you have to choose the correct loan lane. Chapter 3, Day 14 to 30. Choose the correct loan lane. 550 to 579. FHA 10% down or VA if eligible. Expect possible manual underwriting and stronger compensating factors. Reserves, low DTI, strong rent history. 580 to 619. FHA 3.5% down is most common. Keep DTI near 31 front end and 43 back end when possible. Higher ratios may require strong compensating factors. 620 to 650. Compare conventional versus FHA side by side. Ask for 60-month cost comparison, including PMI or MIP differences. Now, once you're in the right lane, here's the part most people miss: rent history. Chapter 4, Day 21 to 45. Put rent history to work. Ensure your application reflects accurate rent. Provide 12 months of bank transactions through approved verification platforms if requested. Exact words. Please confirm the automated system captured 12 months of positive rent and whether it improved my findings. Next, let's keep your money clean, because this is where files get delayed. Chapter 5, Day 30 to 60. Clean money in, clean money out. Large deposits must be sourced. Gift funds require gift letter, donor documentation, and transfer trail. Avoid unexplained cash deposits. Exact words. Before I move money, what deposit amount triggers documentation and what gift paperwork will you need? And listen, this next step has saved clients from denial 48 hours before closing. Chapter 6, Day 45 to 75. Financial freeze mode. Do not open store cards. Do not finance furniture. Do not change jobs without consulting lender. Lenders re-verify employment and may refresh credit before closing. Exact words. When will you re-verify my employment and refresh credit so I avoid triggering a denial? Medical collections. Many smaller or paid medical collections may not impact scoring the same way as before, but underwriting still reviews overall credit behavior. So focus first on utilization and recent payment strength. Now you're in the home stretch. This is where you lock SMART and structure assistance correctly. Chapter 7, Day 60 to 90. Lock SMART plus structure assistance. Pre-approval does not equal rate lock. Ask about lock period and extension costs. Screen down payment assistance programs early. Many states refresh funding annually, and availability can change quickly. Exact words. Is my rate locked? For how long? What are extension fees? And can you screen me for current DPA options in my state and show the 60-month cost comparison? 2 quick real-world examples, then I'll give you the 5-line script you can read directly to your lender. Here are some real-world examples. Example A, score 585. Paid balances under 9%, removed dispute remarks, documented 12 months rent, FHA 3.5% down, seller credits covered closing. Closed in 63 days. Example B, eligible veteran, score 602. Strong residual income, clean 12-month payment history, VA approval without PMI. Now here's the 5-line lender script. Quote my all-in payment, PITI plus PMI or MIP with a fee worksheet. Run automated underwriting with 12 months asset verification so rent counts. Is my rate locked? For how long? What are extension fees? Based on my file, should we target automated approval or manual with compensating factors? Before I move money, what deposit size triggers documentation and what gift docs are required? Up next, your rapid-fire decision tree. 550 to 579, no VA. FHA 10% down plus reserves plus strong rent history. 580 to 619, FHA 3.5% down. Push for automated approval via utilization plus rent data. 620 to 650, compare conventional versus FHA over 5 years. Rural plus eligible income, check USDA, 0 down if qualified. Veterans and active duty, always price VA. Mini recap checklist, screenshot this. Kill utilization plus rapid rescore. Remove dispute remarks. Get 12 months rent recognized. Choose correct loan lane. Source deposits plus document gifts. Lock strategically. No new debt. Screen current DPA programs. Just think, 89 days. That's all it took Lina to go from denied to closing day. If you're sitting there with a 580, a 620, or even a 550, stop stressing and start executing. The playbook is simple. Kill that utilization. Get that rent verified. Use that 5-line script. The market is wide open for buyers under 650 in 2026, but you have to move with intention. Drop a calendar emoji in the comments if you're starting your 90 days today, and subscribe so you don't miss the next strategy, because your first home is closer than you think. Now go lock in that rate.